four markets which we really like in Asia at this point in time within financials. Japan Bank being one for the reasons that you outlined, that at some point in time, once we move from uh, a point where we do not have a yield curve to actual existence of an yield curve, there's very significant shift in different parts of the banking P&L. More money is going to be made on net interest margins. On non-interest income, you can trade better. Distribution business comes alive, and so on and so forth. So these are structural changes that takes a while to play out, but we are at the beginning of one such mega shift. So we like megas by and large in Japan. But what we also like are some of the markets which are what we call structural growth markets. These are Indian banks, Indonesian banks, and Philippine banks. Now, we tend to rotate between these markets, but by and large, these four markets are what we like in APAC financials as of now.
Harsh, really quickly, just on Japanese banks, are you expecting, and I know that this could just be a marginal impact, but any kind of deposit flight as, all of the savers in Japan choose to begin speculating if we do see the continued inflationary pressure to the upside in Japan, and if they were to move on YCC, that people are going to be, rather than holding their cash, which is what they've been wanting to do in these institutions, would rather start speculating, then it leads to a deposit flight out of these banks?
So, Will, ultimately, you're right that as interest rates move up, some of the depositors in various parts of in various economies do tend to start moving more from transaction accounts, which is current and savings, more towards time deposits. It happens, but it happens very slowly. And it happens in small increments rather than all at once. And we saw that, let's say in Singapore, for example, we had fantastic rate rise. We had almost 400 bips delta in rates. But even there, we had almost 4 to 5 quarters of NIM consistently increasing. And we're talking about in Japan, a multi-decade shift. So yes, some of that will happen. Cost of funds will move up, but it's the asset yield increase which will have a much bigger impact. And that's why we like the megas in Japan as part of a multi-year thematic.